Good day, ladies and gentlemen, and welcome to the show on this Thursday, the 3rd of June, 2021. Thank you for tuning in. Glad to have you guys here today. Now, I'll tell you what. Let's get started right away, and let's open up the charts right here and take a look at this. Gold declined from its highest level in almost 5 months as investors assess the latest comments from the U.S. Federal Reserve officials for clues on potential time frame for tapering stimulus. The dollar rose, adding further pressure to gold prices. Philadelphia Fed President Patrick Harker said Wednesday it's appropriate to slowly, carefully move back on bond purchases at a suitable time. They're talking about scaling back on everything. They're getting frightened of inflation. They're getting frightened of the monster that they created, you know. But I'm going to tell you what, if they decide to do anything, it's going to be the biggest mistake that they ever made, because this whole economy now has become basically a command economy. And the Fed's the commander. It's all run off of stimulus. There's nothing else that's propping the whole entire economy up now. There's no real economy. It's all fake, phony baloney, stimulus money that's being injected in everywhere, that's propping everything up. And yeah, the real economy underneath is going to start to improve. You know, there's lots of job openings out there now. Something like 8 million job openings and stuff, and of course people aren't taking a lot of those jobs, but still there's job openings, and the economy's starting to resurge back to life again. But if they think that it's real, in other words, it's not because of their stimulus measures, then they're kidding themselves. And if they start to withdraw that stimulus measure away, they're going to see how quick the whole thing will come crashing down. What'll that do if they do that? Because, you know, oftentimes, you talk enough about something, it transforms itself into action at a certain point. So you get enough of these Fed officials talking the big talk, like Philadelphia Fed President Patrick Harker, talking the big talk about how we're going to fix inflation, we're going to taper, Enough of them talking about tapering amongst each other. After a while, they might actually start to pat themselves on the back and say, hey, we can do this. And when they see the real inflation coming in, maybe later this summer, and the economy is starting to look really good, they might get scared and they might just try it. What's going to be the effect is a crash. It's going to be, they're going to cause something like what happened in 2008. And going back to 2008, isn't that what started all this mess in the first place, practically? You know, I mean, no, it wasn't exactly what started it, but this is when they made their first mistake of coming in there trying to stimulate the economy, trying to fix it. They entered into a Roach Motel. They went a one-way street where they cannot back up. They got big trucks behind them. They're going down a one-way street. They can't turn around or back up now at this point. They got to keep moving forward. It's a one-way street. It's a one-way Roach Motel of never-ending stimulus and hyperinflation at the end of the road. If they try to turn around, it's only going to make it happen faster. You say, Glenn, why will it make it happen faster? I'll tell you why. Because if they try to taper or cut back or anything and the economy starts to collapse in front of them, then they'll get scared in the opposite direction, scared of the deflation, and then they'll have to fight the deflation with yet more stimulus, bigger, brighter stimulus. And that'll just bring it on faster. So, I'm sorry, but there's no real way to move back on all this. He said Wednesday, he said, this is his words, Philadelphia Fed President Patrick Harker said Wednesday, it's appropriately to slowly, carefully move back on bond purchases at a suitable time. Officials have said that they will begin scaling back buying when the economy has made substantial further progress. Yeah, they're seeing this progress. And I'm thinking maybe sometime late summer or early fall, they might decide to really try this. We'll have to wait and see, but we'll be in for a crash if they do. Okay, well, we're going to keep our eye very carefully on this channel and what the Fed's not only talking, but whether they actually might actually try this. We'll have to wait and see if they actually try this. Just talking about it, what happened when they talked about it? Let's look here. This is just on talk. Look at what did the silver, down $1. Everything would crash. You know, not just gold, silver. Everything would crash if they actually try this on. You know, it's called deflation, and the economy can deflate faster than it can because it's all being only held up one thing: stimulus. 27.16 for silver today, down $1, but it stopped its downward slide, and it's starting to recover a little bit again from this nonsense. I'm going to call it what it is. It's nonsense that's going on. Gold today, 1869. It's down $38, which is a big drop for gold. They're putting it on sale for you guys. Already, if it's not already cheap enough. You know? The problem is they knocked the spot price down like that, and I don't think premiums come down very much. If anything, premiums might go up. The dealers out there, they just might. The spot price comes down on silver $1, okay? What they might do is they might bring it down 25 cents, but they'll add a 75-cent premium on there. You know? So you're not going to get much of a deal. You're not on the actual price of silver because they'll probably add a little bit more premium on each time. That's the thing. Real silver is starting to separate in its price. Real silver and gold both are starting to separate in the price because of the premiums. Premiums, people are getting used to the premiums now. And it's going to get only ever going to get larger until this spot price starts to meet up with reality, you know, instead of just being traded futures contracts, which is what it is right now. Let's take a look at cryptocurrency today. 1700 billion, and it's holding steady. Cryptocurrencies, it's held steady right through this. In fact, sentiment has picked up a little bit again, just a little. It's not back where it was, no, but it's picked up a little bit, and it could continue to increase a little bit more, you know, sentiment, because we're in a risk-on environment right now. Fed will do everything in their power to when they see the inflation coming, they're going to do everything in their power to try to struggle out of it, try to wiggle out of it. The inflation. I think the inflation is going to really scare them in about maybe 3 more months. And that's when they might try something. And what happens whenever they try to fix something? They break it. That's why the system's broken right now to begin with. They'll break it even further if they try to fix it when they see the inflation coming, if they get scared and they panic, you know? And I think they just might, sadly to say. Let's take a look now at the stock market today, and it's pretty much level with the board. It's only down 9 points. You know, it was down a lot more earlier, but it's bounced back some. 34,590. Now let's take a look at oil today. 68.96. It's creeping up to that $70 mark. It's getting up close now. It's within striking range of 70 bucks. 68.96. Now let's take a look at the MOVE index, and we see the MOVE index starting to rise. It's like it come down, it made a bottom. Now it's starting to rise again. 55.21 today. Let's take a look now at bonds and rates, and we're seeing rising yields today. We're looking at the 10-year at 1.5. What? 1.5 something? 1.61. 1.61. It's up 2.7 basis points, and the U.S. 30 years 2.29, and it's up 1.4 basis points. Dollar index 90.47. So the dollar's taken quite a large jump. A half a penny jump is quite a large jump today. So they've run for the dollar real fast, because of this Fed news that the Fed might taper. This is their only hope for deflation, and yes, it can cause deflation if we do see the Fed take action. But I think that action, if they do take it, is going to be met with tremendous. They're going to get a tremendous pounding if they decide to take any sort of action, a deflationary pounding. Then they'll have to fix that, and because it'll just get worse until they fix it. And the worse they let it get, the deflation, then at that point, see, they're caught in the middle right now between inflation and deflation. And what's caused this pressure, why this system is trying to flip for deflation and inflation so bad, is because of the over leverage in the system. Unbelievable over leverage in the system. What that over leverage is you see it in front of you, all these derivatives products and all of this what's called fugazi, which is just money that's created from thin air here, there, and everywhere by selling things multiple times. It's like the old joke about the guy that sold London Bridge, This is what's going on in the stock market. They're selling London Bridge. The guy goes up and he sells London Bridge. He don't own London Bridge, but he sells it. This is what's happening in the stock market. Millions, and in all the markets, money markets and everything else, millions of times over. And what they've done is they've expanded everything, inflated everything with all these derivatives. Unbelievable leverage in the system. And so because of that leverage, it's like a bubble that's waiting to pop. It's got so much pressure on it that at least little pinprick, it'll pop into the opposite way. Like right now, it's over leveraged big, and it just pops the other way so fast, see? Because of the pressure. It's basically, the system has got a case of, well, it's just like a person, if they were at the hospital, a hospital patient that has high blood pressure, and say his blood pressure was, a normal blood pressure would be like 120 over 70. That would be like normal blood pressure. This is like a person comes into the hospital with a blood pressure of 900 over 350. And I mean, if he gets stuck with a pin, he's going to explode with that kind of blood pressure, And that's what the system's like right now. It's unstable, completely unstable. I can't begin to describe to you guys how over-leveraged this system is. And so if they lose their nerve, if the Fed loses their nerve, this whole thing could start crashing down around them so fast that it would make them lose their nerve in the opposite direction very quickly. Anyway, thank you guys for listening. Like and subscribe. And we'll catch you guys in the very next show. Bye-bye.